Hey. 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 Hey.
Welcome to Own the Chaos. The stock market is crazy and chaotic.
Crash. You son of a... God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you own it. What an absolutely atrocious day as we await the decisions from the Fed. Guys, tech stocks are getting absolutely hammered, as well as my portfolio, and I'm sure a lot of you guys are as well. It's ugly, but we kind of expected this a little bit. I'm a little surprised, to be honest with you, at the amount of selling that's going on. A little. But we'll go ahead and get into that in a moment. But guys, as always, let me go ahead and shout out the starting five. We got Ralph Vandenhoek, Rudy Brown, John Gostin, D. Ray, Jonathan Schreiber. You're all our starting five. If you guys did not get to the starting five, it's either because you were late or you didn't have that notification bell hit. So make sure you're hitting that notification bell, subscribe, hit that thumbs up on your way in the door. I certainly would appreciate it. And by the way, shout out to Dim Sweets for the sweet beats. Thanks so much for that, Dim. My buddy Dim has been hitting me up with some new beats. If you guys like that, let me know. I got a whole list of them that I'm probably going to be throwing into the countdown all week. Kind of get you guys' feedback. Which ones you like the most? Maybe we'll use them all. Who knows? But figured I'd switch it up. You know, sometimes you just get, well, I do. I get sick of hearing the same thing all the time. So you just got to switch it up. I think we've been playing that music, the music before for a good 6 months. So it was time to switch it up. And I appreciate Dim hooking me up. That dude is super talented. And a lot of the instruments are the instruments that he plays himself, which is pretty crazy. So awesome. So yeah, anyways, I only got one. Jeff is not a fan. Listen, I'm a big hip hop type of, I like the beats that hit hard. Sorry. he's made multiple we got what the fuck with the music. We got my portfolio's hurting and I don't like the music. We got one naysayer. Don't worry, Jeff, there's more coming. Google interview liked it. He said, yeah, I agree. Oh man. Listen, here's the thing. people, I don't know why. It's so funny. Eric says the music sucked. It is funny. You know, every time I switch to music, nobody likes it until about a week. And they're like, all right, you know what? This actually kind of fucks. This song fucks. And that's usually what'll end up happening. So I'll give it some time. I'll throw in some new music. Like I said, there's going to be a few to choose from. So we'll see where it goes from there. But yeah, see, so we got a little bit of a mixed crowd, but we're going to continue to, yeah, Brian Nitch says, how about using Crash by Dave Matthews Band? Unfortunately, that would get me demonetized. So I got to use music that has no copyright on it. And that music was specifically made for this channel. That is a Only Chaos exclusive. You're not going to find that anywhere else, people. So appreciate it. That was worked very hard on. The old tune was not. I actually ripped that from a Pat McAfee show. It was time to branch out on my own and go original. Our family says, can I have another birthday tomorrow so we can go see another huge bounce? That would be great. Yeah. Interesting stuff. So great question here. Adi Adinas. Is it Adindus? I think it's Adindus. I'm probably ruining it, but why is the stock market crashing today? So we can take a look at, I'm going to show you guys, not crashing. Why is it selling off? I don't want to say crash. That word gets used way too much. But we have the NASDAQ really is what's getting the biggest beating right now. The Dow is actually only down by like fractions of a point last I checked. Let me just double check that here. Okay. Right now, the Dow's, only down 56 whole points, although it did give away a lot of its gains earlier in the day. It was up like 400 points and then sold off. Not surprisingly, I mean, the gap ups that we saw in the futures today didn't make a whole lot of sense to me, especially with things that are coming. I'm going to get into that in a second. But we also have the S&P that's only down around 1%. Still not a big deal, although it did break a crucial support, and the NASDAQ is at another crucial support. NASDAQ's down 20% on the year, and or 20% from its highs, not 20% on the year, 20% from its highs. So we're still very much in correction mode, not bear market, not long-term bear market, I don't think anyway. And so I think that this could be an interesting area. You know, this area on the Qs, this is NASDAQ 100, and it is sitting right at around 318, 317.92, give or take. That's a low that we saw back on February 24th. If you guys recall, that was invasion day when the Russians invaded Ukraine. That's when everything kind of tanked. And we saw it kind of retest that area on the 8th, right before my birthday, the day before. And then now we're back down to these levels. So why is that? Why are we looking at tech and seeing it absolutely get crushed? It's a couple reasons, but the one big reason is we have the Fed decision to raise rates, which rates will go up this time around on Wednesday. We're going to hear on Wednesday whether or not we're up 25 points, 50 points. That's going to be the big question. Now, if you guys recall, Jerome Powell actually talked about this in front of Congress about a week and a half ago. I can't remember the exact date. About a week and a half ago, 2 weeks ago, he said flat out, I'm supportive of a 25% or 25 point rate hike, 0.25%. And that's what I think's probably end up going to happen. Now, the market's also doing a couple of other things, but I'll get into that in a moment. So make sure you stay tuned. But right now, what you're seeing is a tech sell-off because of, I think largely in part of, as a reason is because of the Fed decision. I think there's still a lot of people out there that are worried about what the Fed's going to say, especially as the CPI numbers came in red hot again. We saw inflation numbers that were as high as we've seen in 40 years. And so there's a lot of risk there involved with stocks and tech stocks, growth stocks in particular, and especially stocks that make $0. If you're in a stock or if you're in a company that is not profitable, you're probably feeling it the worst today. And I don't know if that necessarily slows down anytime soon. Could be wrong. This could be a day of capitulation. I have not seen this much negativity in a while. Consumer sentiment is at lows that we haven't seen in a decade and a half. And so I think that that's also playing a key part of it. But we also have the Russia and China side of things. And I think that that's what's also got a lot of people feel fearful about a recession. There's surveys out, and I'm looking at Barron's right now. Okay, if you guys don't check out Barron's, they have a lot of really good articles, but literally the front page is just like possibility of high inflation is sluggish at GDP growth or 70s style stagflation. Why the Fed put might be aside. I mean, another article titled here's why it's time to focus on inflation economists ignore. A bleak outlook, slower growth this year, and maybe recession. Stagflation is here. What's next? Real wages hold the key. I mean, and then finally, one last one in the front page of Barron's. The 40-year-old bull market still has room to run, and here's why. I'm with that guy. I think right now there's a lot of issues surrounding around a potential recession revolving around the crisis with Russia and Ukraine. And there's talks. I mean, there's a lot of headlines right now today about Russia reaching out and asking for military help from China. I think if there was a country or an economy to do that, China would be the one to help them out. But it's in the form of military supplies, not bodies, not boots on the ground. And so I don't even know if China's going to entertain that. I think it would probably be in their best interest not to, but we'll see how this plays out. And so that's another reason. We have a lot of people raising red flags about fertilizer. 75% of the world's fertilizer comes from Russia, Ukraine area. So that's obviously a big deal. Then you have the wheat and corn issue as well. 30% of the global corn and wheat supply come from that area. We've seen unbelievable moves in those commodities as well. So there is a lot of risk involved. 50% chance of a recession, though, I don't see it. We have unemployment that is ridiculous right now. I think it's 3.8% unemployment. That is insane. We see a lot of capex going on, meaning capital expenditures. A lot of companies out there still spending money. There's a lot of money on the sidelines. I mean, an unbelievable amount of money is being saved by households. I just don't see it. I just don't see it fundamentally. We can look at the chart though. Like I said, on tech stocks in general, really the NASDAQ 100 is getting absolutely hammered. And I think, I think that this could potentially be a bottom. We could potentially be seeing a flush out here. I mentioned 318 was that support. So far, it's holding above that. Let's go ahead and look at the 5-minute chart. We've seen it kind of threaten to fall below that, but if it closes above 318, I think we're in good shape. Now, I'm not saying that it can't go lower, because if it does, if we break below that support, I could also see it coming back down to these levels around 306, 305 on the NASDAQ 100, which means your favorite large cap techs are going to continue to probably get hammered here. But this to me just screams opportunity. I mean, I mentioned this last night. Meta Platforms is it brings in $40 billion in free cash flow every year. The stock's trading at 15 times next year's earnings. That is ridiculous. That is unbelievable. I mean, unbelievable. PayPal's trading at pandemic lows. Forget about pre-pandemic, pandemic lows. And so I think that there's a lot of opportunity here on good, solid companies. And now notice I mentioned those two companies are making money. They're bringing money in. Okay. I think that those are all good, solid companies. Apple's now down to 150. We are pretty damn near oversold levels on Apple as well. It's sitting on the RSI at around 32. It could get to 30 for sure. But why? What's wrong with Apple? What's changed with them fundamentally? Nothing. Zero. Nothing's changed there. Airbnb is about to have the biggest summer of their life. And the stock's trading down 4.5%. I mean, you look at some of the travel stocks, for example, Booking.com, or Booking Holdings, I should say, also trading down today. This is at a level that I think also deserves to be bought up. Travel demand is going to be absolutely insane, and it does not matter what's going on in Ukraine and Russia. That's just my 2 cents. Unless something goes seriously wrong, right? If this is the worst that it gets as far as the conflict in Russia and Ukraine, I don't think that we see anything change as far as demand is concerned, especially when it comes to travel. I think there's a lot of people that got the head up their ass and are just scared as shit, running around trying to figure out when the next crash is coming. And it's like, chill out, guys. We're fine. We are fine. So, does it suck today? Am I feeling the pain a little bit in my portfolio? Sure. But I think that there's a lot to like here. I think there's a lot of good opportunities, and I'm just sitting in my hands and waiting for the pop because I think that it's coming. I mean, there's a lot that's oversold right now, a lot. And now the big boys are finally playing ball as well in this sell-off. I just talked to you about Apple, Microsoft as well. Microsoft's down 25% from its highs, almost 30%. So that's pretty wild. That's not yet oversold though, believe it or not. Amazon, not quite yet oversold, especially since it's had a recent bump on the news is regarding the split and the buyback, but still that seems to be at a reasonable level. Just given where it's coming from. I mentioned Facebook as well. These large cap stocks are getting there. And I think today could potentially be the day. Yeah, I mean, that's one big thing. I was thinking the same thing today at a new variant. There's been a lot of new variants, even since Omicron. I don't think they've actually wreaked all that much havoc. You're seeing a bunch of spreading going on in China, and I heard reports on the UK today as well. But the thing of it is that people are learning to live with this. You know, this isn't going to stop anybody. Restrictions are going to continue to stay lifted. People are just going to live with COVID. If you want to wear a mask, wear a mask. If you don't. And I think that's the mentality. I think that's the way that everybody is going to be moving forward. So maybe this is just a bad day in the market, and then it is providing itself with a good opportunity. I like this as well. Jeff Panicka says Ryanair Lines did well today, up 4 1/3%. I think where's Southwest today? Market's officially closed, so it did close around 0.5%. Let's look at Delta. That closed flat on the day. So interesting that they didn't really move all that much. They did have a little bit of a pop at the beginning of the day, then ended up getting dragged down with the rest of the market. You know what did well today, though? One of the stocks that we put on the watch list this morning, Bank of America. The financials are crushing it as of late. They had a really steep sell-off because of the sanctions that were imposed on Russia, and now's the time for them to get bought back up. And I think that's going to happen. I think this is the absolute bottom for something like a Bank of America and the financials in general. One big reason is because they do raise rates on Wednesday, and this is instant money back in Bank of America's pocket. Bank of America doesn't have to spend a dime. They don't have to lift a finger, and they get money. They get revenue because of interest rates going up. Period. The more that they raise rates this year, the more money the Bank of America makes, and they don't have to do anything. So I think that there's definitely opportunity there in the financials. I put this on the watch list this morning. If you guys have no idea what I'm talking about and you're just tuning in, make sure you hit the join button next to subscribe. You can become part of the Chaos Crew, where I put out a watch list every morning before the market opens up. You can be a part of the Discord group that we have as well. Would love to have you guys in there in the community. There's a lot of folks that have nice little bulls or bears next to their names. They're all part of the Chaos Crew, and they know what's up. So this one was on there, and I think that there was other ones as well that are presenting some ridiculous opportunities. I put Meta Platforms on there this morning as well. So guys, if you want to be a part of the crew, you want to support the channel, you want to get a nice watch list to kind of get a good sense of how the market's moving, hit that join button next to subscribe. Also, there's plenty of other stuff in there as well. I'm actually excited about a new development within our Chaos Crew. Level 2 crew now gets portfolio reviews, and it might just show up in a video. I've had a couple of reviews already so far. Some of them have been fantastic. Some of them have been atrocious, and that's what I'm looking for. So if you guys are in level 2, you're watching right now, you want to become part of level 2, hit the join button next to subscribe. But I'm doing portfolio reviews. I'm going to give you my thoughts, my opinions on whatever it is that you're holding. If you're full of meme stocks, AMC, GameStop, those are the ones that I want. I want to see what you guys are at. Not to make fun of you, not to completely roast you, just a little bit maybe, but just to give constructive criticism, because I'm sure there's a lot of people that are in the same boat as you. Maybe you're way over leveraged in tech and you had no idea the opportunities that were there for you in value. And so, there's this huge imbalance. And so, it's not financial advice. It's just me giving my thoughts on portfolios that, might be a little bit wonky. So hit the join button next to subscribe, or you can go to ownthechaos.com if the join button isn't there or available to you. Would love to have you guys as a part of the crew. Jeff Chocolate submitted his. It is not atrocious. Yours is actually quite good. I'm proud of you, man. I'm proud of you. But I'll give you some constructive criticism on that as well. There was some stuff that Don was saying. No one actually cares about the variant. There was news for the stock market now. There's other news for the stock market now. Yeah, for sure. And there's bigger headlines, right? And he also mentioned this. Pretty sure I live next to the world supply of corn. Yeah, you and me both, brother. There is a side of Maryland that is very rural, nothing but corn and soybean. That's all we got. But I see you guys chiming in here. I appreciate it. So those are my thoughts on today so far. There was one other thing that I wanted to address too. If you guys don't subscribe to FunStrat, they're a great outfit to be a part of as well. I mean, great platform. Tom Lee's the man. People give him a lot of shit sometimes, but nobody's right all 100% of the time. Regardless of the fact, he brought up an interesting point today too. Part of his morning email that goes out, it says, is Russian oligarch money the reason equities are pricing in a greater than 50% chance of a recession, while credit and bonds are far lower? I thought that was an interesting thought. One of the big reasons that there's this theory that this could potentially be happening is because of what's called PEP, politically exposed persons, PEP. 300 billion, or estimated 300 billion, or 10% of Russia's $3 trillion of household net worth is held overseas in Europe, US, and Asia. And we're sanctioning them. There's a lot of portfolio managers, hedge funds that are divesting all of that and holding cash now. And so maybe that's a theory. I don't think so. I think that that's something that people are kind of latching onto for the most part. But I don't think that there's a whole lot there. $300 billion is a lot of money. Let's just be clear about that. Which, by the way, $300 billion makes up 10% of all household income or household net worth. That's wild. I mean, here I thought, I'm not trying to shit on Russia. I mean, kind of am. I just thought they were worth a lot more than that. It just puts it all in perspective as to just how much money the U.S. has. How much control we have financially over the rest of the world. $3 trillion of household net worth, is held overseas, or $3 trillion of household net worth is the entire Russian economy. That's wild. 300 billion of that, the 0.01%, the Russian oligarchs, have 10% of that. That is crazy to me. But unbelievable. I see a lot of you guys having questions. We're going to get into those. I appreciate it. Oh, thanks. Snookaroo says, thanks for really do much appreciated. I appreciate you. I appreciate you people watching. We got a pretty decent crowd in here. Got 190 folks hanging out. I see a lot of people asking about SoFi. I loaded up on SoFi last week because I thought it was cheap. I still think it's cheap. It is actually below $8 a share. I cannot believe this. Cannot believe it. There's a lot of headwinds for SoFi. One, they don't make any money, right? They're still reporting losses. So this is going to be one of those stocks that gets really hard hit on rising rate environment. We've talked about that. But the stock is just down so far that it's unbelievable to me. The market cap on this now, as of the close, is $6.5 billion. Remember when I was saying that it cost $5 billion to build SoFi Stadium? And now SoFi is almost worth as much as that. That's just mind-blowing to me. Obviously, an oversold territory here now with SoFi. I do think that this is cheap. $7.74 is what it hit today. That's mind-blowing for a company that is in serious growth mode, right? SoFi, I think, is a buy here. Will there be more pain? I think it's certainly possible. I think it's certainly possible to see more pain out of SoFi if you can believe it. Yes, especially when we get confirmation that rates go up, we're going to see a lot of these stocks get hammered. However, the growth story here is extraordinary. They're forecasting a 500% increase in revenue this year. I mean, that is what I'm holding on to, is the growth story here. And when they do become profitable, which they are close, I think that this stock pops. I just don't want to time the bottom here. I don't want to. This is one of those that I'm just going to continue to add to. I have options calls on this that are way far out, and I'm considering getting more in shares as well on SoFi, just because it is so cheap at this point. So I have a decent amount of it. I'm probably going to continue adding to it, but this is one. I always talk about the exceptions to the rule. SoFi, in my opinion, is going to be one of those that I would continue to hold on to, just because I think that we do see a bounce out of this, and it probably will be violent. I think that this is one that I would probably hang my hat on. Not saying to go all in on, right? You just heard me talk about adding to it. Means I don't have an entire, full-size position on this for me personally. I plan on continuing to build a position on SoFi. And like I said, there's other headwinds here. They do have dilution that they're worrying about. There are shares being sold. So that's always a strike against any company or any stock in general. But I don't think it's enough for it to be down here at $7.93 per share. So that's why I think this is one that I would probably go after. If there was a stock that I would go after that doesn't report profit or doesn't report positive earnings yet, this would be one that I would go after, just because of the growth story. Growth story here is so strong. Another one would be Affirm. I can't believe this hit 25 or almost $25. It was 26.02 was the low today. That's insane. I only have a tiny bit of this, so this is probably another one that I probably would consider adding to. That's wild to me. It's now sitting, it is an oversold territory, sitting down at 28. It's well below the 50-day moving average, and let's not even talk about the 200-day. This is crazy to see it down here. When you talk about partnerships that they have, now, again, same situation, right? They're reporting for losses still. They're not yet profitable, but the growth story here is going to be wild. They have partnerships with Amazon, with Apple, with all kinds of other major companies, and I think that their growth story is just getting started. This is wild to me to see it all the way down here. Price to sales is at 9, and then we also have market cap at 6.3 billion. Afterpay was bought for $40 billion. If you guys recall, Block bought them. I think it was Block bought them for $40 billion. Affirm right now, which is arguably the largest buy now, pay later outfit, trading at 6.3 billion. Now, granted, their earnings were awful and it deserved to be sold off. I think it's overdone at this point. So I do think Affirm is one that I would probably hang on to. I think it's one that it is overdone. And I think it's a great long-term. I see Jay asking about a long-term. I think it is a long-term hold for sure. I think long-term, we're going to look back on this and be like, man, wish we would have grabbed it at 26. And there was a lot of people, I'm sure, that looked at Affirm at 176 and were waiting for it to sell off and take advantage of it, that still have yet to have pulled the trigger. They're afraid of it down here. I think it's important to understand that being afraid of something that's all the way down here is kind of contradicts what people's thoughts were when it was up here. Remember, I said that I thought that it was way ahead of itself at 176.65. I mean, there's no question. I said that the entire way up. Once they got over like 150, I was like, all right, this was way too much. I mean, it was getting there. I sold out of it around the 120s when I bought initially down in the $50 range. I gotta be honest. I never thought I would see it get back to the $50 range, but that is wild to see it down here at 26. So I do think that this is a pretty solid buy. So those are the ones that I think are good solid buys that are not reporting positive earnings yet. They're still reporting losses, but the growth story is still there. I think there's really good opportunity here. But I think that there's even better opportunities in great quality stocks, great companies that are reporting for profit, that are crushing it and don't deserve to be down here. NVIDIA, central triple bottom here on NVIDIA. This is one that I think has really good opportunity. Look at this. Technically speaking, it actually looks pretty darn good. I think this is a great buy down here. They continue to crush it. Their earnings were phenomenal. They raised guidance on their last earnings. This is one that I think definitely should get bought up and needs to be bought up, in my opinion. Looking at this, it is a little bit hot as far as forward earnings are concerned, but they have the ability to grow into that. Forward earnings on this, they're trading at 38 times next year's earnings. I don't have any worries about that at all. This is a company that has pricing power. In my opinion, I think this is one that, in an inflationary environment and with the shortages that they're experiencing, NVIDIA has the ability to price in whatever they want. The demand is off the charts, so they can name their price and people will buy it. NVIDIA, in my opinion, is a good one to go after in this environment. If I had a choice, if I had a choice between NVIDIA or Affirm or even SoFi, I still probably would take NVIDIA. It's the safer bet. It's way overdone. And I think that this is one that I probably would take advantage of on the sell-off. But I think there's a case that you can make to own both of these. I really do. If you can stomach a little bit more risk, go after some SoFi. If you want to take on something that has a little less risk but has tremendous upside still, NVIDIA is your stock. That's for sure. AMD, yeah, same. I see a lot of people ask about AMD. Same thing. AMD is the same thing. They have pricing power. Their earnings were off the charts. Lisa Su is phenomenal as a phenomenal CEO. The way that she's been able to turn this around, and look, you can see technically as well. This looks great. There might be some opportunity if this comes back down. Let's see if it comes and touches 100. That could be a support for that as well. All semis are getting hammered. Yeah, says Brian. They are. But I think this is presenting itself with an opportunity. And because the reason why I say that again is just pricing power. In an inflationary environment, they have all the power right now. And that goes for Apple as well. I mean, we just talked about that at the top of the show. Apple has sold off pretty significantly, $183 almost, $3 trillion value market cap that it hit earlier this year, and now it's trading down to 2.46 trillion. Sold off, but this one also has pricing power. Now, very interesting to note, this closed below the 200-day moving average today for the first time. First time it's been anywhere near the 200-day moving average since June of last year, if you guys recall. Here it was, right back here, June of last year. It didn't even close below that June of last year. It just touched it several times before finally ripping back up. That is interesting because if the momentum continues here, I think that Apple could. Now, I'm not trying to scare anybody. I think Apple does have the potential to maybe come back down and test maybe around 147, 148. This is another potential bottom here, especially if it trades. That's usually a bearish sign, if I'm honest. Trading below the 200-day moving average is usually no bueno. So watch here, see if it sells off a little bit more. But I still think Apple is a great buy here. So I think these are all going to be great opportunities, especially the large caps. Snowflake, I would stay away from. Look at this. It's still selling off. Those earnings were absolutely atrocious. Would not be in that at all, at least for right now, especially as, rates are going to continue to go up. So I probably would stay away from stuff like that. But I would go, there's so many good quality companies out there that are giving you great opportunities right now, like literally right now. I would be buying some stuff up. Luis Barrios says, I'm looking for Apple at 135. Really? Talk about ripoff, Rita. I like it. I don't know about 135. I have it marked down here. I was looking at this earlier. I had Apple marked down here around 138. That's kind of where I'm seeing it. But, hey, to each their own. If it really does sell back there, I would take out, they always make jokes about people taking out mortgages to buy stocks or to trade with. I would take out a mortgage to buy Apple at 135. If that happens, bro, shit. Andre says, Shopify. I have a price target of $400. Should I wait or start buying? I think you got some time on Shop, to be honest with you. And you know, in the e-commerce space, there's other really good opportunities. Look at this downtrend. It has yet to have really come back up and test and break over that downtrend. It's been downtrending since November 19th, 1762. We look at some of the fundamentals here. It's still trading at 136 times next year's earnings. It ain't growing into that, man. It ain't doing that. Luis Barrio says, it will 135. I will sub to come back and say I told you so. You won't be the first one, my friend. I just don't know if I see Apple at 135. But as far getting back to the Shopify conversation, this is still overvalued in my opinion. It is oversold. I mean, it's been oversold for a month, 2 months now, but I think there's still room for this to come down. This reminds me of Amazon over the .com bubble. And I should have pulled the chart up on Amazon. Maybe we can find that. But that's what it reminds me of. Let's go out to like a monthly chart on Amazon. Now, it's not quite an apples to apples comparison, but we saw Amazon go all the way up to 108, and then it came back down to, I got to zoom in here. What is this? 387 from 108. So it was at $113 a share during or just before the bubble burst in 1999. And then it came all the way back down in the single digits after that. I'm not saying that Shopify is going to face that fate, but that's the kind of move that's possible for something like a Shopify. So yes, I think $400 is possible on this. Look at this monthly chart. Look how crazy this is on the monthly chart. Unbelievable. Each one of these candles is 1 month, guys. That is insane. And here it is. Look at this. I see where you got the 400 from. Right here. You can see it right on the monthly chart. Was a resistance there before, it came down and held as a support. I mean, but I do think that there's more pain to come for something like a Shopify. So if I was in e-commerce, if I was looking for e-commerce play, I would go after something like Amazon that obviously is well established. They're not going anywhere. The company or the stock is sold off considerably. I think this is a solid buy here. You look at forward PE. What did I say? 139 times for Shopify, even with the sell-off. This is trading at 60 times. So much cheaper than that, even though Amazon has the potential to come down even a little bit further. You could look at something like Etsy, for example. Etsy's been doing extremely well. One of the outperformers, I think, as far as e-commerce is concerned. They had a really great earnings, even though it's been feeling the pain here lately. But they had really great earnings this past time around, doing extremely well despite some of the inflationary issues we're seeing. But Etsy's another good one. This is trading at 33 times next year's earnings. So that's really cheap comparatively, right? If you're looking at the e-commerce side of things, I think Etsy's a better buy fundamentally. Devin says tech sector can wait. Other sectors are getting money poured into them for the coming market slowdown from the Fed rate hikes. What's your favorite long-term hedges? Great question. You know what? You know what's the easy answer is for this, Devin? And you may or may not like this. It's the stock right here. Berkshire Hathaway. You want exposure to value stocks and you don't want to have to research which one's the best one to get into? Buy yourself some Warren Buffett. I mean, this is all-time highs again today, significantly outperforming the market. And you know what the crazy part is? A giant portion of Berkshire Hathaway is, and this is Berkshire Hathaway B shares, by the way, a giant portion of Berkshire Hathaway B is Apple. So consider this, right? I mean, Berkshire Hathaway is still ripping, and it holds a giant position in Apple. So this to me, you don't have to do much work for this. You want every good quality value stock at your disposal, just buy some Berkshire. And yes, it hit all-time highs, but it's not stopping here, homie. It ain't. It's going to continue to rock and roll. Jeff Chocolate, what's up, my man? Says, with all the Russia economic news, do you think Amazon and other companies have stopped services to Russia to be extremely affected as it comes to the next earnings report? It's a great question. I think there is going to be a little bit of a impact there. I don't think it's going to be as bad as some people think, because the exposure to Russia pre-war wasn't that significant. I mean, we're talking very small portions of U.S. companies, and really the financials too, did not have giant exposure to Russia. Now, China, that'll be a different situation. And I think that could be some of the reason why we saw a lot of selling today as well, because if Russia is doing dealings with China, that is not good. That is not good for us. That's not good for anybody for a lot of reasons, but definitely on the investment side of things, it is not good. I mean, if Russia starts doing dealings with China, you're talking the possibility of Tesla pulling out. If China goes after Taiwan, the semis are going to be in trouble. Like that would just crater the market. So I don't think that's going to happen. China seems to be not in favor of this whole thing with Russia and Ukraine in general. So I don't think that's going to happen. I think they know better. If they were smart, Xi Jinping, however we feel about him, I don't like the guy, but he ain't stupid. Okay, so I just don't see that happening, but yeah. Okay. Webull doesn't have fractional shares. Anyone? Oh yeah, thanks, Devin. Well, Devin, it's only $30. I just want to make sure that I'm clarifying. I'm talking about Berkshire Hathaway B. By the way, does anybody know what Berkshire Hathaway A shares are looking like? They've never done a split ever. $493,000 a share for one share of Berkshire Hay. 493K. I remember when this was sitting at 100K, and I thought that was crazy. But yeah, Berkshire B is what you want. There are other platforms out there that do offer partials. I think it depends on whether or not those stocks participate in that. But you could check out, I know Fidelity offers that. I think Charles Schwab offers fractional shares as well, Devin. So you might want to check that out, or anybody else who's interested in that. What a bargain. Yeah, no kidding. Oh my God. Can you just, I mean, that's insane. Absolutely insane. But anyways, there's Berkshire B crushing it. Absolutely crushing it. A couple of the other stocks that were waking up too was the defense stocks. Lockheed Martin was up 1.25. If you guys recall, I put out a video about this and talked about, some of the stocks that could benefit off of, times of crisis, conflict, that sort of thing. So Lockheed Martin was one of those. Raytheon was another one. A little dyslexic there. Raytheon's another one. That one was up just barely today. General Dynamics, where were we at? Half a percent. So they were at least green while everybody else was getting hammered. Not crazy green, but still, you would have been crying on that one. Snooker. Berkshire Hathaway A. Only up a measly $3,800 today. No big deal. I see a lot of you guys asking about NEO. That is one I would absolutely stay away from. That fits the bill, guys. I wouldn't even with it down here at $14. I'd say yes. I would stay away from this. I would not. I actually haven't looked at it in a bit, but I can't believe it's at $14. That is wild. Down another 12% today. A lot of the Chinese stocks got hit today. Alibaba. This is why I said that I think that it's probably a good idea to stay away from these for now, because the big wild card, Alibaba is a strong company. They're doing really well, but you have the CCP in their pockets. Like, Nobody wants that. No investors want any parts of that. I mean, DD was down. It got crushed. That was down 6-7%. Like nobody wants anything to do with China. And I sure as hell don't. So, and Neo's lumped into that. So I would stay away. I would just stay away in general. You want exposure to EV, just buy yourself some Tesla. I mean, really. Tesla, Ford, much better companies to invest in. And Ford's nice and cheap still. Came back down to 1575. Neo is amazing and Baba too. But see, if I listen, Strimberland, I'd be with you. If China had nothing to do with them, I'd be with you. I'd be in it. I'd be all about it. I would buy Baba with both hands if China didn't have control over them like they do, and all of the other publicly traded Chinese stocks. I just can't do it. I just can't do it. I mean, listen, if you want to take a flyer on it, Andre says I'm buying Baba, too cheap, just ignore it. If you want to take a flyer on Baba and know the risk getting into it, I got no problem with that. You know, it is ridiculous, right? Like it's almost kind of like a why not trade. You know what I mean? So I'm with you there. I'm with you there on that. This would be an acceptable why not trade for me, for sure. We already talked about a firm, Marvin. And speaking of Ford, what do we do with Ford? None of the news seems to impact it positively. The problem here with Ford is the supply problem, especially as it pertains to nickel, which is used in a lot of their batteries. Don from the Don Front Show talked about how Tesla is starting to move away from nickel. And so like that might not impact them as much, but there's still a lot of natural resources that we need that has now been stunted because of this issue with Russia sanctions. And by the way, those sanctions aren't going to be lifted just because the war's over. Putin's going to have to not be the leader of Russia in order for that to potentially happen. The war's over. Sanctions are still going to remain in place. So I hope nobody thinks that that's going to happen. But great stuff, guys. You guys have been amazing today. We got 250 of you guys hanging in here. Make sure you hit that thumbs up button. We got about 67 likes, which is weak sauce. Y'all know the drill. Hit that thumbs up. I certainly would appreciate it. And the engagement here is amazing. You guys are chatting away, and I'm loving it. Do you think we'll see a run up into the split date for Goog? So Google or Alphabet is going to be splitting. What is that? June, I think, right? I don't have that off the top of my head. Oh my God, this looks sexy as hell. Look at this chart. Google might come down just a smidge more. Maybe it might come down just a smidge more. Look, we got like 2,500 on the nose. I think is that support, that bottom. Close at 25.19. Do you really want to take that chance to see if it comes down to 2,500? I don't know if I would. Not on Alphabet, but could it run up into that split date? I think it could. Probably. I think it runs regardless, though. I think it runs regardless. So I think this is a solid buy as well. I can't believe I didn't bring this into the conversation when I was talking about large caps. But yes, I would be all over Google right now. This is a great point that Jeff brings up, and I'm actually having somebody come on that I know that is a much better expert than I am on cryptocurrencies. Funny pranks wrong. Funny pranks gone wrong. Also bringing up a solid point. I'm wondering if the sanctions that are being imposed and the U.S. dollar really being weaponized. You know, I wonder if this could potentially be like a watershed moment for Bitcoin or cryptocurrencies in general, right? And I don't know enough to really give you a solid answer on cryptocurrencies and Bitcoin. I am not an SME on that or subject matter expert on Bitcoin. I know enough just to get me in trouble, right? You want to talk about equities all day long, I'm your guy. But with cryptocurrencies, it's still something that I'm still trying to really dive into. But I have to wonder you know, Russia can't be the only country wondering, hey, what if we just bought up a bunch of Bitcoin so we didn't have to worry about the US dollar as a global currency? Now, it's still early, right? It's still early to have those conversations. You can't just go buy corn with Bitcoin. You can't just go buy wheat with Bitcoin. So there's definitely, we're not there yet. But I think that there's certainly questions that are worth answering as far as that's concerned. And I'm going to have him on soon. Hopefully, we're still trying to work that out, but I definitely want to get somebody else's opinion that is an expert or a very well versed in Bitcoin. This guy, he's owned it since well under $100 per Bitcoin. Dude's insane. Love that guy. And I can't wait to have him on. So we've made contact. We're talking, and I can't wait to have him on. So make sure you guys are subscribed and hit the notification bell, because you're not going to want to miss that show. I can't wait for that. All right. That's going to do it for me, guys. Thanks so much for tuning in. I'll be back here tomorrow at 3:45 p.m. Eastern time. So hit that notification bell to get notified when I go live. And finally, if you didn't hit the join button next to subscribe, hit that join button. For $4.99 a month, you get a watch list from your boy every single day before the market opens to give you a snapshot of how the market's doing, get my thoughts on where we're headed for the day. And then there's 5 stocks that I lay out for you. I give you technical analysis on all of them, why I think that they're worth maybe scooping up or at least watching. Again, like I said, it's $4.99. Help support the channel, help supports everything you see behind you. And that's going to do it for me, guys. Thanks so much for tuning in. I'll see you tomorrow. Bye.